everyone, to Real Men of Real Estate. I'm your host for today. My name is Paul Matamoros, and I'm with Metro Properties Holding Company and also Envisage Real Estate Incorporated, DBA, in San Francisco. Today's show is going to be such a beautiful show in the sense that I have a very, very nice interviewer here, or a person that I'm interviewing, very, very experienced in the industry of lending and so much more. So it brings me honor to really have him here on this show. But before I start or present him, I wanted to read a little bit more about what we're going to be having here on this show. Now, the topics that we're going to be discussing is how or where are the interest rates going today? And also, where is the real estate market going as far as what we see today? So much with inflation being talked about, people that want to buy, but where can they get money? Which brings in the other topic that we're going to be talking about, and that's about what is the difference between Q&M loans versus non-QM loans. Okay, so without any further ado, I want to read this bio of this gentleman here. Abel is an accomplished bilingual mortgage professional. In fact, he's been in the mortgage industry for over 40 years. Over the years, Abel has done it all in lending, from frontline lending to executive leadership to representing Wells Fargo as the national field short sale manager. In uncertain times, Abel educated the real estate community on how to approach and succeed doing short sales. Now back in production, Abel is passionate about the needs and goals of his clients. He brings a wealth of skill and expertise to his work with home buyers and realtor partners to ensure an on-time closings. Abel is a regular speaker at webinars hosted by the California Association of Realtors, and his goal is to help educate realtors and the community of real estate financing topics. Abel, I mean, I could say much, much more. I could vouch for that because this is how I met you at one of the educational programs through San Francisco Association of Realtors that I'm a member of. And in fact, I have like 10 pages of the notes that I took. So, but anyway, my special guest, please, Abel Fregoso Jr., which is a mortgage loan originator with Homebridge. Welcome to this show, Abel, please.
First of all, thank you very much for having me. I am very excited. I think what you guys are doing with this program, Real Men of Real Estate, is fantastic because it's all about education. I keep telling my students that I teach all around that you must stay a student of the game, because in this business, real estate financing, everything changes. Coming through this pandemic that we just did, we saw some massive changes in guidelines, in products, in underwriting. Just amazing what we just went through. The good news is we're starting to see a recovery in the sense that more investors are coming back online to provide capital for more products that allow us to cast a larger net for buyers. Even though we have a shortage in inventory right now, that will change. This market changes. It's cylindrical. It goes up, goes down, and right now we're experiencing low inventory. But I truly believe that we will start seeing inventory grow by the summer of 2022.
Fantastic. Thank you very much, Abel. And you are so right. We have spring around the corner in a couple of months. And I think that from an investor's standpoint, they're always looking, or even people in general, once the sun starts shining, people can get out a little bit more. Well, that I don't know about the COVID situation, that a lot of people haven't been able to come out, but they are desperate to come out. And this is where the time that things happen. Well, to get more into our interview, Abel, the first question I pose to you is, where are interest rates heading today?
You know, Paul, there is a lot of moving dynamics that are driving what constitutes interest rates. But let me give you a little bit of better understanding about interest rates, because you hear the media saying that the feds are going to increase interest rates. And right away, people think, oh my God, now I'm not going to be able to buy a house because interest rates are going to go up. Well, there's a misconception there, because there is a difference between long-term interest rates and short-term interest rates. What we use for mortgages are long-term interest rates that are really driven by mortgage-backed securities, the 10-year bond, and short-term interest rates, which are the ones that the Federal Reserve manages. And right now it's at zero, and they're thinking maybe a quarter, maybe a half come March. Is just going to increase the interest rates on your credit cards, on borrowing, not mortgages, but just borrowing. But really the dynamic that's really driving long-term interest rates right now are twofold. Number one, we hear inflation is coming through at a very high pace. You know, a lot of it had to do with the pandemic, the supply chain, but now we're really starting to see that things are showing the inflation. Right now we're at 7%. You know, last year we were at 2.5%. So it's creeped up considerably. And inflation is the worst enemy to long-term interest rates. So what we've seen in the last 90 days is the 10-year bond go from 1.30 to 1.9. So when we had interest rates of 2.5 6 months ago, now we're at interest rates in the high threes. Now, that in itself is also what is contributing to the Federal Reserve wanting to hike interest rates so that they can fight inflation, which is going to be beneficial in the long run for long-term interest rates. But in the short run, we are going to see interest rates go up. Right now, we're in the high threes. Possibly by the end of 2022, we may be in the low fours. So what will that do to the real estate market? It's going to slow it down. But, you know, I just want to make sure that your listeners understand that there's a big difference between long-term interest rates and short-term interest rates. And as the Fed continues to increase the short-term interest rates, that's going to bring down inflation, which means that long-term interest rates will then begin to come back down in 2023.
Fantastic. So hence inflation is an enemy to long-term, and that's where the Fed really can gauge things, right? Well,
absolutely.
I think I remember, I don't know if you remember this, I'm going to give away my age here, but remember back, I think it was in the 70s or 80s, I forget that. My uncle and my dad were into construction and buying and selling property in San Francisco. And I remember the interest rates back then were in the 18% or something like that, right? And my aunt, she was the broker. So I would hear little things like that's funny how things stick in your mind. So why I say that, it's nothing going to be like back then, right? So even if it's 4%, we could manage with this. And plus the Fed, they know that they have to say gauge this accordingly, because we've not only did the Great Recession stop things, but with the pandemic, so they know that they have to keep this economic engine going as best they can. Well, fantastic. Yes, I'm sure that our listeners are going to get a lot out of this interview with you, Abel. And there's so many in this generation, the millennials, even Gen X's, that have a great opportunity to get into the real estate market. There are programs in San Francisco too, that clients of mine that call me, like the BMR, below market rate, and the Dahlia program. But yet these are lottery programs. Of course, San Francisco rates these properties at somewhere about 25 to 40%, 25 to 30% of market value, hence below market rate. But the sad thing is that only one out of so many that enter this lottery get that. But touching on housing, Abel, we know that this has been a problem not only here in San Francisco and the Bay Area, but across this nation. So we want people to know that they have say something to work with here. Fantastic, excellent. Well, what I wanted to mention here now, Abel, is that we have to break for a commercial break here soon. And I just wanted to get our audience ready for the next question that we have for you. And that question is, what are the differences between QM loans versus non-QM loans? So our listeners, stay tuned for our next segment, and we'll be right back to have Abel answer that question. Welcome back, audience, to Real Men of Real Estate. I am your host, Paul Matamoros. I'm here with my special guest, Abel Fregoso Jr., and he was just on our last segment, was talking a little bit more about the rates, but I think he might even have a little bit more to share with us on this. So, Abel, please take it away.
Yeah, Paul, before we move on from interest rates, I just wanted to piggyback on what you had said earlier about back when the 70s, 80s, the interest rates were at 18%. So if you look at over the last 50 years, the average interest rate is right around 7.5, because you take that 18.5, 19 of the early 80s, the 2.5, 3 of the 2000s, and you average it out, and it's around 7.5%. So even though rates are going up and we will be at 4%, 4.5%, we are still at historic interest rate lows. And I talk to a lot of buyers that say, oh, I missed the window of the lowest rates. No, you don't look at it that way. You want to buy, because in the last year, the value of property has increased 18.5%. So even if you're at 4%, you still have a tremendous opportunity investing in real estate, even at 4%.
Fantastic. Thank you very much, Abel, for sharing that, because that is important. I think the next, probably what one might think is, okay, so the interest rate is workable, but then a lot of people might even think, well, property has gone up so much that I wish that banks would let go of some of this money. So with that said, let's go into the second question, Abel. What are the differences between QM loans versus non-QM loans?
So let me give you just a little bit of a background, okay? So prior to the Great Recession, we had loan products where if you put a mirror in front of a buyer and it fogged up, you were approved, because that's how loose the guidelines were. They had what they called the liar loans, where you just said, hey, I make this much money, and you say, oh, okay, you're approved, let's do it. Don't have to verify it. So once the Great Recession hit, which was really driven by the real estate market collapse, then Congress decided that they needed to tighten up guidelines within the lending industry. And from that was born what was called the Dodd-Frank Act, that promoted only qualified mortgages. Qualified mortgages, or QM, are those mortgages that are your conventional loans, your government loan, FHA, VA, but those loans do not have prepayment penalties. They do not have balloon payments. They do not have interest-only payments, where before the Great Recession, you had what is called the option arm, where you would allow to pay only interest, and the balance became negative and became what is called negative amortization. So all those products were taken away, and only qualified loans was with Dodd-Frank wanted to promote in the industry. Okay. What ended up happening is it swung the pendulum way too far to the other side, which meant that we started neglecting a lot of potential buyers who couldn't qualify with these QM loans. Because on a QM loan, we have what is called ATR, ability to repay. Okay. And when you have that ability to repay, you're going to get a loan. So you got to document your income with taxes, pay stubs. You got to have money in the bank. You have to have a history of employment for 2 years. So it's a real tight box. So it really left a lot of these potential buyers out of it. But those are the real clean transactions that the industry wants to see. But again, it neglected a lot of potential buyers, especially self-employed buyers.
Exactly.
So when the powers to be started thinking about, hey, we've got to come up with more products that are going to cast a larger net to bring in more buyers, specifically self-employed, since in California, about 62% of the population is self-employed. So when it comes to buying homes, because they're self-employed, they're going to take their tax returns and they're going to reduce the net income so that it reduces their tax liability. That's all great and dandy, but when it comes to buying a home, you don't show enough income. Hence comes in non-qualifying loans. Now, non-qualifying loans are going to be completely different than your qualifying loans. You're going to have the ability to verify someone's income with bank statements. Okay, no tax returns, only 1099s if that's what they get. So these loans are going to allow a much greater population, specifically self-employed, to qualify to buy a home. And in these products, we feel that it is a growing segment because now we're starting to see tremendous traction with self-employeds being approved with these products, non-QM products.
I think, that's an important point that you bring out, Abel, because in our industries, real estate, that sometimes a lot of money comes in, and then sometimes you go through these dry periods, right? And seeing that you said that 62% of Californians or people in California are self-employed, it goes to reason that loans or the ability to have money work for you needs to be placed in California because it's such an economic motor for the United States, California. And seeing that I do come from San Francisco, it's so important to have these products, or at least let people know that this product is out there, right? Wouldn't you think?
Absolutely. And I mean, here's another one that's really important is with investors and rental property. Okay. You have a lot of investors that own rental property. They declare depreciation that helps in tax sheltering liability. So when you look at their tax returns, they also show very little income because they're writing everything off. Well, we have a non-QM product where as long as the rental income is equal or greater than the mortgage payment, that includes taxes, insurance, principal and interest, they're approved. They do not have to show tax returns as well. And, obviously, a couple of caveats. They have to be landlords or investors for at least a year, and they have to have at least a 620 credit score. But other than that, I mean, it is really a great product for those investors that can't show income through their tax returns, but their mortgages are low enough so that the rents are covering it.
Abel, let me ask you this question, and great information. So the non-QM, if I may, is it adjustable? In other words, the QM, I would imagine that it is fixed, and it's probably the square that the feds want people to fit into. But let's face it, there's other people that aren't going to fit into that square, right? And so I just want to know if this non-QM, and probably our listeners want to know, will this have the propensity to adjust versus it not being fixed or it being fixed?
Paul, that is an excellent question, because people need to understand that you are absolutely correct. QM means that little box with the best interest rate that you're going to get, because that's where the government would like to have the majority of the lending being done.
Mm-hmm.
However, because we are talking about outside the box thinking, there is going to be a premium, and it's not a lot. Right now, your 740 FICO, 80% LTV, money in the bank, they're going to get a 3.5, 30-year fix. Okay. With a non-QM loan, you're looking at 4.5, maybe 5%, depending on the credit score, but they are 30-year mortgages. So there is no adjustables. There are no negative amortization. All it means is that as a non-QM buyer, you are going to pay maybe 1.5% more than your regular 3.5% interest rate. But again, it goes back to understanding the big picture. I had a client, we ended up doing a bank statement loan. The rate was 4.75 a year ago. She now has made 18.5% interest, 18.5% increase in her equity on her property, even though she's paying 4 3/4. She says, you know what? It doesn't matter. I'm making wealth with this real estate that I bought because the value is going up.
Fantastic. That is such a good point to voice to our listeners. So, you know, it's so important for people to understand you might not be a seasoned investor, but if you see an opportunity, this non-QM really fits the bill. And like Abel was mentioning, the interest rate or the cost of that, you being or our listeners or anyone in real estate that is in the market to be an investor, you could make up that sum either by selling, or if you have income coming into the property that covers that cost and you're making money, you and your group, hey, it's a win-win situation, and it's a lot easier because you're outside of that square, so to speak, right? Well, fantastic, Abel. I really appreciate this question that you've answered for us, but we do have to break for a commercial break, and we'll be right back. Listeners, our next question is, where is the real estate market heading? So don't go away. We'll be right back. Okay, welcome back, everyone. I am your host, Paul Matamoros with Metro Properties Holding Company, and I am your host for Real Men of Real Estate. And again, my special guest is the mayor of Rio Rancho, Mayor Greg Hull. We were discussing in our last segment of, is it important to re-energize the development of the new Civic Plaza? And as the mayor mentioned, it really is, because when you have so much money invested in something, you can't just let it go. And I remember that's so true. My dad, my mom, they were always, they were parents of mine that always would tell me, if you have something worthwhile, do not stop your interest in it. So I'm very thankful that I had parents that inculcated that in me. And that's why it's so, I'm tenacious in certain things. So Mayor, this is so right. A lot of investors know that to be true. You cannot let your investment just wane. You have to keep interest in it and keep it going. Well, fantastic. The question now, Mayor, is, are you behind development in Civic Plaza? And what do you see it becoming? What would you like the plaza? I was there at your office a couple of days ago, and when I was going to invite you, but you weren't in, and I remember taking the picture right out of the 4th floor of your office, looking at King Boulevard, which, folks, if you haven't seen this, stay tuned. Every Thursday, I have investor meetings that go all over the nation at 2 p.m. Mountain Standard Time, and I will let you see that. It is such a beautiful view, but there are components there that are just wanting to be built there, right? So Mayor, can you please talk about how are you visualizing that area, specifically there on King Boulevard?
Well, Paul, that's a great question, and I appreciate you bringing it, because really, if you don't have a plan and you don't have a vision on which direction you want to go, you're really just kind of throwing darts. And you and I talked about this earlier, is that when I came on board, is that when I was elected mayor, we had to look at city center as to how we were going to make investments, how we were going to move it forward, how we were going to alter or change, what we were going to alter out of the master plan, and what we were going to keep there. And one of the original components of the master plan that I think is critical, as you start to put so many community services in one location, city hall, hospitals, event centers, employment center, educational centers, senior centers. The next logical component of this is somewhere for people to live out there. And so when you think about places to live, you think about nice townhome situations when you get closer to downtown, so that you have higher density living circumstances. Perhaps even some multifamily, I think, would work out there. When we did the college years ago, there was envisioned that we would do dorms for college students out there, so that college students could stay there and attend school there. So there's really a lot of different things that you can do. Now, when we talk about residential and growth, the nice thing about City Center is you've got a lot of the large components there already. You've got a lot of the infrastructure there. And a lot of times when you go into a pre-existing area where you already have an established residential area, new development and growth in an existing residential area can be very difficult. It can be, the people that have already established homes there are looking to kind of protect the way that the feel and the character of the neighborhood, and that's to be respected and understood. So that's why with City Center we have the blank slate out there, and we've added the big components so people know what they're getting if they're going to go out there and buy out there or rent out there or live out there. They know what they're getting, right? Because you already have the event center, you already have City Hall,
Right.
you've got the hospital, so
Yes.
you've got.
So if I could say something, Mayor, so this is
Yes.
important. Any investor out there that's listening to this, or any real estate person of interest, this is a huge point here. The mayor mentioned something about it's a clean slate. So you have heard of that real estate phrase, it's called NIMBYs, not in my backyard. So you don't have to deal with that out here. Basically, it is a clean slate, so you could basically build things that are really going to enhance that Civic Plaza, and then you bring in the component of, say, mixed use with higher end condominiums, this, that, and the other. But now is it's a clean slate, and it's time to really plan this accordingly. You could do anything you want, from professional offices to retail, higher end retail, to I've even talked to you, Mayor, about I've even liked to put a couple of towers in there, higher end condominiums. And you did mention something about El Dorado City. It wasn't El Dorado that you liked. And
Yeah, El Dorado Hills in California, they're just
yes,
outside of Folsom. Is my kids live there, and they have a main street that's just developed like this. And really, you can look at El Dorado Hills Main Street, the way that it comes into that area and dead ends at a movie theater, right? But you've got the shops and the retail on either side. You park in front. It's got a real downtown nice feel to it. And then you've got retail on the ground floor, professional offices on the second floor, and then I think condominiums on the third floor.
yes.
So you've really got that. And as you look down there, it's a very vibrant retail area. It's beautiful. And even on that street, they have some high density housing. They've got senior apartment complex on one side of the street, and I think family living apartment complex on the other side of the street, if I'm remembering this correctly. But my kids live there, and we just got out and we walked and we went shop to shop to shop, and then ultimately ended up at the restaurant at the end of the street, just outside of the movie theater, where we had lunch out on the patio, and it was just gorgeous, right? So really, it's that type of thing that could truly be visualized in downtown in Rio Rancho's city center.
Yes, let me
And
mention something, Mayor. This is
sure.
important. Anyone that knows the Southwest, specifically New Mexico, what really defines Rio Rancho or differentiates itself from the neighboring well-known cities, one Albuquerque or Santa Fe, is that it really hasn't had an ingrained personality put in it yet, or a culture, which is a good thing. And not to say that cultures of these other cities are bad. It's just that this new city really, the sky is the limit for it. So it really hasn't defined its culture or its personality yet. All I know is it's wanting to grow. So this is important. You did mention from retail shops and restaurants, anyone out there that knows a modern city, artisan restaurants that people could go and have different cuisines. This is really what we want here in Rio Rancho, not just one specific cuisine, but I just use San Francisco as one, and I've traveled internationally a lot. But San Francisco, what I love about it, and the Civic Center there, which I know that you've been there, Mayor, but you're within blocks of everything from, the opera, right, to cafes, to parks. Right. And this is what we could do here in Rio Rancho. Well, fantastic. I wanted to just mention something else here. Once again, the NIMBYs, there's no one living out there yet. And what's important, in our last NAIOP meeting, there was someone that mentioned that a lot of people are traveling to these neighboring cities, Mayor. And don't you think that that's a disservice to Rio Rancho? We need to really keep our bright minds and our employed people here, and even to the point that they can become the employers to employ people here. What do you think of that?
Well, and I think that's let me just say this. I don't know how much more time we have in this segment, but I think jobs in that migration of talent would probably be a great topic for our last segment. But and I think we can really hit on that. But just to kind of wrap on the city center side, like what you're talking about, is the blank slate that's out there. The way City Center is also designed and set up in Rio Rancho, similar to what El Dorado Hills was, is that I noticed that when we were there, they shut down that whole main street, and all of the vendors came out on the street, and it became a walking area as opposed to being able to drive it. So they were doing this big craft fair and farmers market, and it was just really cool. And everybody was out there selling their wares. City Center lends itself to this opportunity, and as you've seen, especially coming down King Boulevard, the pad sites are actually already there that are queued up for some of this stuff. And then of course there's a lot of land that's not been developed. So as we continue to lay in the infrastructure, as we continue to kind of look at how to queue this up, what I refer to, Paul, is I refer to it as what plug and play. Plug and play to me means is that the land has the infrastructure like a road, it has the water, it has the electric, it has the sewer, it has the necessary things in proximity, in close proximity, so that developers or builders have quick and easy access to those utilities. A lot of times development, especially out in city center and some of the areas of Rio Rancho, have been stifled just because of the lack of infrastructure into certain areas. And so, and as you know, recently we worked on a highly recognized NAIOP gave us their highest award, their Vision Award, Clive Matthews Vision Award, for the work we did in Los Diamantes, which was a public-private partnership that worked with developers, the school district. Yeah, go ahead.
Mayor, we're going to wrap this up. This is very interesting.
Okay.
We'll continue this on the fourth segment, but let's break for a commercial break, folks. And what we're going to be asking the mayor on our next segment is, would you welcome investors, and what would you really want? What are the steps that they have to put in place? We'll be right back. Welcome back, everyone, to Real Men of Real Estate. I am your host, Paul Matamoros, with Envisage Real Estate Incorporated, DBA, and Metro Properties Holding Company. I've had a special guest through these segments with me, Abel Fregoso Jr., a mortgage loan originator from Homebridge. We have discussed with Abel 3 questions. Where are the interest rates heading? We noticed that Abel did share some important information on that. The second question, what are the differences between QM loans versus non-QM loans? And then also the last question, where is the real estate market heading? Well, Abel, please share some more with what you want to share with the audience, please.
Thank you, Paul. So I want to go back to an earlier comment that I made about how I believe there's going to be more inventory in the marketplace come the summer and the later part of the year. So when the pandemic hit, the government decided that they were going to help the public, especially those that were being shut down, they're losing their jobs, they weren't able to bring in income, but they own a home and had to make mortgage payments. They introduced what is called a forbearance program. Unfortunately, there was so much misinformation about what a forbearance program was all about. And all of a sudden, it just caught fire where people were saying, you know what, my mortgage company says I can miss 3 payments and not be affected in my credit because I'm in forbearance. And we saw just a slew of people go into forbearance during this pandemic. But unfortunately, they did not understand that whatever that forbearance plan was it for 90 days, 6 months, 1 year? At the end of that forbearance period, the entire payments are due. So if you had a 90-day, then all 3 payments are due. So if you had a $5,000 mortgage, now you owe $15,000 all at once. And so people said, wait a minute, I can't afford that. Well, you know what? You're now going to have to make arrangements with the servicer to either modify, defer, or just flat out can't afford the house anymore. So what we're seeing is that the CFPB, the Consumer Financial Protection Bureau, has instructed all servicers to really do everything they can for these people that went into forbearance and did not understand what it all meant. Now we've got all these people that have these back payments that can't make the payments. And now they're thinking, okay, well, I'm going to lose the property to foreclosure. No, there is over $1 trillion in equity in these properties. So for them to say, you know what, I'm just going to let them foreclose on me, that would be dumb. They need to hire a real estate agent, put the property on the market, and cash out that $300,000 in equity that they have. So that's why we're going to see more inventory come to market, because those people are going to be forced to sell their homes, because it would be just ridiculous to lose it to foreclosure.
Fantastic. And this, Abel, this is coming from your executive experience or position with Wells Fargo Bank when you used to deal with foreclosed properties, right? Short sales, REOs. Fantastic.
Yep.
So, you know, our listeners, I love to educate myself, and I see that what I have learned, like Abel, I think he's the same way too. We want to share our knowledge with people, and I try to surround myself with people that like that. You know, along with the Real Men of Real Estate, the group there, and Marie, we all appreciate learning and sharing. And this is what has brought value to our shows. And we want to keep going that. We don't want to just, this is going to be non-esoteric. In other words, that people that just keep information to themselves, we don't want that. We want to share it with people, because after all, you are our clients. If we could share with you the ease of either buying, refinancing, or things like that, it's going to make for a better win-win situation. Fantastic. Well, Abel, I wanted to mention something else here too. In San Francisco, like in Southern California, do you see that that people are getting to the point that that they are being a little bit concerned about this, you know, foreclosing situation that might be right over the horizon?
Yeah, and mostly because I still have a lot of friends in servicing, and they keep telling me that, you know, the amount of modifications, deferrals that they're processing are pretty high, but not everybody is going to qualify for those programs. And so those are the people that are going to have to find another solution to figure out, okay, I don't want to lose all that equity I have in that property, so I need to figure out what my next step is. But, you know, again, Paul, you mentioned it, and I believe it. If you walk away with one idea from our show today, then we've accomplished what we were set to do.
Fantastic, Abel. Well, Abel, if you could voice your phone number twice, that would be great, please.
Absolutely. Area code 619-572-3316. That's area code 619-572-3316.
Okay, and here is my phone number, listeners, 415-226-4155. Once again, area code 415-226-4155. And my website that we could help you, sanfranpropertiesforsale.com, and go there, and it'll be so easy for you to get a hold of me. And if you wanted to talk to Abel, I will get you in touch with Abel. Abel, it has been a pleasure to have you here on Real Men of Real Estate. I hope our listeners see the value in qualified, experienced gems like yourself. This is so great. I mean, it brings me real great joy. And actually, in the future, I'd love to invite you again, because this is an evolving industry that we're in. And so it's so beautiful to make connections with people of like mind, that they love to learn and share. Well, folks, once again, I am your host of Real Men of Real Estate. My name is Paul Matamoros. I have a business, Metro Properties Holding Company, but I also do business in San Francisco as Envisage Real Estate Incorporated. It's been a pleasure to have this show with you, Abel. Abel, we're going to have to get together again.
Absolutely, Paul. Thank you very much for having me.